Leo, please mute them. Okay.
Yeah, sure, sir. I'll take care of it.
Yeah, thank you. Okay, so the today's topic is a very interesting one. Is corrections are temporary, growth is permanent. Okay, and a lot of investors have a lot of questions in their mind. Correct? How do I know? Because these questions was asked by many of the investors. Our investors, they keep on asking so many questions because markets are very volatile. Sometimes it goes down and sometimes it goes up, and sometimes suddenly it falls. So how long this will continue? Okay. So first of all, why the markets are going down? Okay, that is $1 billion question today. Why markets are continuously going down, and how long this market will fall? How long this correction will continue? Okay, till what time? Till what period? Whether it will take 6 months or 3 months or 8 months or a year? How long this will continue? And when will my portfolio will do? Especially people who started in last 1 year or 6 months or 3 months, they started negative. They started seeing negative returns in their portfolio, right? So when will my portfolio will grow? Okay, and what investors should do now? Okay, markets are volatile. Markets are going down. Correct. We agree. What investor, as an investor, what I should do during this kind of market? How I should, participate, or how I should take care of my money during this time? So that is very important. Finally, we will go through some live case studies. The investors who have invested from last 5 years or 10 years of portfolio, how they have invested, how their portfolio has grown during the many phases. We'll see some live cases. These are the questions which I hear from clients. If you have any other questions also, we'll discuss. Okay, we'll ensure that whatever the time you're going to spend in next 30 to 40 minutes is well reaped actually. Okay, the once again, I thank all investors for joining on time and investing your Sunday time to learn something new. Okay, and as usual, our disclaimer before we start the actual session is this session is for to educate our investors, to give them some clarity, to give them some inputs. This is not a product promotion, or this is not an investment advice. Okay, so that is a disclaimer. First question is, why markets are going down? So the markets are going down because every market is a cyclical in its nature, just like our day-to-day moods. For example, when I get up early in the morning, okay, if I get some good news, or if I get some good messages, I'll feel happy. Okay, the moment I when I go to washroom, if there is no water in the bathroom, then I'll get upset. Then I'll feel angry and I'll call security. Why the motor is not switched on? There is no water in this thing and all those things. Okay, then I'll get ready. If my wife cooks a good breakfast, and if she gives me a good tea, then again I'll feel very happy after eating the breakfast and having tea and all those things. And once I'm ready and when I'm going for work, during the journey, if there's a heavy traffic, if a lot of vehicles are there, and if the vehicles are going here and there, then I'll feel upset, and I'll get irritated by this honking sounds and all those things, right? So this is how my mood varies during the day. Similarly, market mood also varies, because when there are more buyers, if they're happy buyers, the market may go up. If there are more sellers, if there are panic in the market, the markets are going down. Okay, we'll discuss in detail how the cycle goes, and what are the various cycles the market goes, and how as an investor we can participate in this journey. Okay, so the first and foremost reason, as most of you know, inflation and increase in the interest rates. Correct? Inflation is also increasing, interest rates are also increasing. When I say interest rates, the home loan rate, the RBI repo rates, and all those things, they started increasing. And inflation is also like all the living costs, or all the material costs are increasing. We'll see why inflation is increasing and why government is increasing the interest rates. Okay, we'll also see that. And there is a global uncertainty, because of it can be because of war, it can be because of COVID cases. Of course, in India we are safe, and most of the cases are reducing. But in other countries, like maybe China, or if you take South Korea or some other countries where the cases are still not in control, these cases are still increasing, there might be some uncertainty due to that. But main uncertainty is due to war. how this war situation between Russia and Ukraine is affecting markets, and how Indian markets are, affecting because of that uncertainty. We'll see that, and we'll also see who are these FIIs. Okay, who are these FPIs? Why they are selling, and why they keep on selling, and why the markets are going down because of their idea, or what's their strategy. We'll discuss on that also. And finally, even though FPIs and FIs are selling, but domestic investors are investing. Okay, that is good thing. How that will protect the market? That also we'll see. Okay, so this is the cycle nature of market. What I was telling. Okay, every market goes through 4 phases. How many phases? 4 phases in its journey. One is called boom period, which we recently saw in the year of 2021, where there was a market boom and there was a peak in the middle, and then it started falling. Okay, then again it will go through the down phase. There will be trough. There will be downtrend in the market, and there will be trough, and then after that it will start recovery, and then we'll go to peak. For example, if you take a business, any business, when the business is started, it will take some time to take off, right? They need some customers, and they have some products. Their products should fit into the investors basket. And once the investors, clients started buying those, customers started buying those products, then their business pickups. Once the business pickups, then they will have a challenge of growing their business, and again the business will go into the peak when they grow their employees, they grow their products, and they grow their market share, everything. The business goes into the peak. After once business peaks, again it will go through some rough patches because of the competition, or because of so many government rules, and because of a lot of GST rules and all those things. The business affects. Once the business is affected, again it will take some time for a business owner or entrepreneur to come up with the new idea and come up with a new solution, and again he will go through some rough patches, and again he will implement those ideas, and then business will again pick. But at the end of the day, if you see the market cycle, even though it goes through the boom period, recession period, or depression period, but it grows over the period of time. From last 30 years, last 40 years, the markets are growing, and again this is also one of the phase where we have to accept this phase, and we have to go through this phase. Okay. Recession, people say recession, but in India there is no recession. We call it as a slowdown. The markets are slowing down, our economy is slowing down, but there's no recession as such. Okay. Even during 2008 also, India has never faced a recession. There was a global slowdown, there was some job losses, there was some tough time, but still we managed it. Still we are able to generate some 8%, 7% GDP growth rate even during the 2008 market recession. So most importantly, there are 3 phases of market. One is called as a bull market, which we have recently went through after the COVID fall. In 2020 March and April, market went down. Many investors got panicked. How long this market will go down, or how long this how further the market will fall, and all those things. They were in panic. But suddenly what happened? There was a suddenly bull market, and market started picking up well, and it has continued till 60,000. Sensex touched 60,000. There was a time there was a joke in the WhatsApp saying that now Sensex has touched 60, it becomes senior citizen. At the same time, Nifty has become adult because it has crashed 18,000. So that is called a bull phase. And there is also called as bear phase. When is that bear phase? When, especially when in 2008, when market went suddenly to the all-time high, and it fell 40%, 50%. It was in that downtrend for almost 6 months, 8 months, or almost a year. That is called as a bear market. When market is continuously, it will start falling, or it will start correcting from almost 22,000. It went up to 8,000. That is called a bear market. And now today we are in a Congo market. What is Congo market? Suddenly it goes down, and again it comes back. We've seen, right? Last 2 weeks back, there was a fall, 1,000 points, 2,000 points, 3,000 points. It was falling continuously, and suddenly within 2 days again it bounced back. So there is an upsurge, there is a downsurge. This is keeps happening because of the. So that's why we call it as a kangaroo market. So how do I, like, we as an investor should be very take care of my portfolio, or what should I do in this situation? We'll see how our investments should be placed in this time, and how what strategies should be used so that we can get maximum benefit out of this kangaroo market. We'll see some live case studies so that we'll get some clarity on the current market trend and how we can utilize this. Okay, now why inflation is increasing and how it is affecting interest rate. See, when inflation is increasing, okay, first we'll discuss why increasing, inflation increasing. Because of the war. I'll take the example of war because it's almost like next 3-4 months war is going on between Russia and Ukraine. First thing is, majority of the raw materials, like it may be crude oil, it can be wheat, or it can be oil, sunflower oil, natural gas. Those raw materials are getting affected because Russia is exporting almost 6.5 million barrels of oil every day. So when I say 6.5 million, it is almost 1 million is almost like 10 lakh barrels. 6.5 means almost like 65 lakhs of barrels of oil every day they export into the other countries. So because of the war, there is a reduction in the exports. The countries are not getting the supply because most of the both the countries are busy in the fighting war and surviving, because for their country people, saving the life is very important now. So there is a export has reduced. That is affecting the other countries who are importing the oil. That's why they have to increase their cost. Since they are getting at a higher rate, obviously they have to increase their cost of the product material, end product. For example, wheat, 29% fall. 29% Russia and Ukraine put together, 29% they are the wheat exports. So many foreign countries, they consume wheat as a bread or as a burger or something. So they have to prepare. Their production cost has increased. That's why all the it's naturally it has an effect of global market. That global market, because of that global ripple effect, that ripple effect has some certain impact on the Indian market also. That's why Indian markets are also correcting because of this thing. What all the things are affected because of war? One is naturally crude oil and natural gas, and second one is like our wheat, maize, sunflower oil, because 75% of the exports sunflower oil is done by Russia and Ukraine, both countries, and fertilizers also to certain extent. So that's why this is the major effect of increasing the inflation. As the inflation increases, government has to control that inflation, so they'll increase the interest rate. So once they're increasing the interest rate, that will have control on the spending of the people. So that will reduce the cash flow in the market. So once the cash flow is controlled, so that the RBI is able to maintain that inflation rate. So this is why the RBI has to increase the rates to control the inflation. So now we'll see who are this FIS, who are this FPIs, and who are this BIS. Okay, what they are doing in the last 1 year. Okay. First of all, FII means, foreign institutional investors. Who are these foreign institutional investors? These investors, their headquarters are not there in India. The companies are not established in India. They are registered in other countries, but they are investing in India. Those are called as FIS, and institutional investors. These are the large companies. Okay, majority of them large companies. They identify certain companies. They identify certain sector. They identify certain industries. They identify certain manufacturing companies and all those things, and they come and invest. Once when they feel like that particular company or that particular industry or that particular sector is growing, they will come and invest, and whenever they get a profit, they will pull out the money out. So this is what happens. Similarly, we have FPIs, foreign portfolio investments. Who are these? They are also like our retail investors in other countries. They invest through foreign portfolios. Like they invest in mutual funds. They invest in stocks, direct stocks, or they invest in hedge funds or bond market. These are called as foreign portfolio of investments. So both of them have certain cap of investment. They cannot exceed certain percentage of holding in each share or each companies. They have to have that limit. SEBI has put a strict limit for the foreign institutional investors. They have to invest only like 15%, 20%, or 25%, depending on the company or depending on the structure. They will put the cap. They cannot invest more than that. Before that, they will segregate within that. They'll segregate their portfolio, and whenever they get a profit, they'll put the profit also. Who are the DIS? Domestic institutional investors. Like we have our insurance companies, we have mutual fund houses, pension funds. Like we hear that. Recently there is an article in the headlines in the newspaper. Actually, pension fund (NPS). They are telling that government to stop the NPS investments in equity because it's volatile in the nature and all those things. So these are the domestic institutional investors, including provident fund. They invest in market, either through mutual funds or through insurance companies or through pension funds. They all participate in the market. Also, they generally they pool the money from the small investors. For example, I am doing some investments through SIP or through some small amounts. My money is collected in the through mutual funds or through some public provident fund, and it will be invested in the market. So these are called as domestic institutional investors. How? Rekha, can you mute? Somebody is unmuted. Okay, thank you. So what happened in last 1 year? I have taken the data in the last 1 year. What's exactly happening in the market? Okay. For example, if you see the chart from May 2021 onwards, you're able to see the this data I have taken from the Money Control website. May 2021, June, July, until October, the last previous 6 months data is there. In May, there is something called as they buy some units and also they sell units. When the net flow, selling increases than buying, then it will be called as negative cash flow. If you see here, 6,015 crores net negative sale, which means whatever they invested 1,66 crores of amount and they withdrawn 1,72 crores, that net it becomes negative. Similarly, if you see the domestic participation, 1,05,000 was the investment and 1,03,000 was the withdrawal. So the net 2,67,000 was the investment, because there will be some investors, they will be withdrawing their money. There will be some investors, they'll be investing. Based on that, the cash flow decides. If you see overall, if you see every month except the September and June, there's a huge negative cash flow. Especially in October, they have withdrawn almost 25,000 crores, and in similarly, if we see the next 6 months data, that is from November 2021 to April 2022, the net negative cash flow has increased. If you see the selling of domestic, FIS, it has become 40,000 crores, 35,000, 41,000. Average, if you take out all the last 6 months data, it will be somewhere between 42 to 43,000 crores has been withdrawn every month. That's why we are able to see negative trend. It's not in this thing. Even it started from May 2021. It's the last 1 year back itself. But the volume was not that much. The volume, if you see the volume, it was at 25, 24,000, or sometimes there was a positive cash flow also. Somehow it has managed. But in the last 6 months, what happened? There's an increase. Currently, there's an increase in the outflow. That's why the markets are affected. But the good thing, as I told you, people are okay. People are domestic institutional investors are investing. If you see the thing in the month of November 2021, almost 30,000 crores has been invested. In the December, 31,000. Hello, Abhishek, can you please mute yourself? Okay, thank you. So there is a negative, domestic investors are participating. That's why the market are certain stabilized. If they also start selling, like now what happens next? Current situation, since markets are very volatile and FIs are still continue to sell, it will continue for maybe another 2 months or 3 months or maybe 6 months also. We don't know till when retail investors start panicking. Once retail investors are started panicking and they started withdrawing that money, okay, from the market, then both sides we can see negative. Right now we are able to see positive side on the DII, negative side on the even though the negative is more and positive is less. Somewhere the markets are going down from, like last if you see the last 60,000 levels, now it is almost like 53,000 levels. The Sensex has dragged. If once a DIS starts selling, what happens? Market will fall more. Okay. Earlier, if you see the market levels were like 25,000, 30,000, like before COVID, 35,000. Maximum it was at less than 40. The market was at less than 40. So even 1,000 points or 500 points or whatever the points are there, that was heavy fall. We call it as a heavy fall in the market. But now the markets are playing at a different level. The markets have grown to 60 levels, and there is a correction of even the 1,000 points or 1,500 points or 2,000 points. It's a quite natural. We don't need to panic for that market fall. But what happens since 1,000 points down means we are now normally we feel okay, the market has corrected very huge. This is quite common in the next 6 months or next 8 months. And as a retail investor, I should not panic about this. So because FIs are waiting for that opportunity. Once the market goes down to certain level, as I showed you in the cycle, either trough or below recession point, they will start reinvesting their money because they have taken out the money from the emerging markets. India is being also one of the emerging market. They have taken out the money right now, but again one or the other day they have to come back. They have to reinvest that money. So once they start reinvesting, again the market will shoot up. What happens? The point here is that as a retail investor, if I start panicking, if I'm taking out the money now, again I'll start investing only when market goes up. So I'll be losing out this opportunity. The best thing is I should stay in the market, even though they are selling. We know how the market are going, growing. So we should stay invested at this point, so that we make a good opportunity. Hope this point is clear. Why FIs are selling and what is their strategy? If you're able to, if you're all clear with this, say yes in the chat box, so that we'll continue. Great. Thank you. Okay, let's move on. So next question is, how long this market will go down? Okay, how long it will continue? Whether it is next 3 months, next 6 months, or next 1 year, that is the question. So major events. Can I see some answers? What will be the next major event in next maybe 1 year, 2 year, or next 3 years? One of the major event is coming. Can I see some answer? What will be the? I want to hear from my audience. You can take a wild guess. Okay, elections, very good. War.
Next again, a repo rate increase may be in card.
Yeah. Repo rate increase, sir. It's again, as we discussed, it's a next 1 or 2 years. It's quite common. That's a good answer actually. The next thing is major event is, as somebody mentioned, in India, it's elections. 2024 elections. So elections, once election campaign starts, or if I have seen in the year of 2013 October till October 2013, the markets are in the same situation. It was in the very volatile. It was in the Congo market. It was not growing. It was in the market actually was in the sideways. It was this sideways for almost 6 to 8 months. The market was in sideways. From October 2013 to till, if you see next 3 months or next 6 months journey, the market slowly started picking up and it has crossed 14,000 levels at that time. At that time, crossing 14,000 itself was one of the biggest move. What we say, 10%, 20% move. Majority of the people, what they did in 2013, during the October and July period, they were waiting, and they thought the market will continue like this. Let me withdraw my money. Majority of the people, they withdrawn their money because that journey was there almost like 2 years from, because 2012 also market fell. So they were not able to see the good growth. They have withdrawn. But the people who have waited for next 3 months or 6 months, they have seen very good growth. Because once the candidate was announced, BJP has announced Modi as their their prime minister candidate, and market started cheering, and then slowly the market went up. And once the election results are announced, obviously the market has grown. Like that, two things can happen. One, either the same government may continue, or same government may not get the opportunity. Depending on that, market may take a direction, but that is a major event which will decide the journey. So apart from that, big announcements like every Independence Day, during August, the Prime Minister will come up with some some announcements. Next 5 years we are going to do this. Like every in every speech, how they used to announce some major implementations. Similarly, they're going to announce something. With that announcement, if some of the FIS, not all, if not all, some of the FMS, they think certain sector or certain industry, certain companies are getting benefit out of this announcement, they'll start investing in those companies. That's when again the money will come and the market will grow. That is one opportunity. The second thing is, as somebody mentioned, budgets. So, somebody like especially our finance minister, they might come up with some announcement. There is a corporate tax cut, or there is some relief for yesterday, like we heard, there's a reduce in the petrol cost. Okay, we get the petrol and diesel is going to be cheaper by 7 rupees, 8 rupees, or 10 rupees. So tomorrow, because of this news, tomorrow market might go up. We don't know. Okay. There are many things, but certain big announcements will definitely cheer the market, or definitely drag the market. As I told you, once the FIS start pumping in, okay, they might sell for some more months, maybe another 2 months or 3 months, and once they see the bottom, they'll start reinvesting that money. Once they're reinvesting, then again it will the rally will continue. So it might take 6 months, or it may take 12 months, and it may take more than 12 months also. But normally, this is, since we are in the sideways, so this should take ideally it should take 1 year period of time, and we'll see this. So how this volatility will help us? Okay, so this volatility is how this volatility will help investors. We'll see a short quick video. Okay.
यहाँ पर 2 स्टील की बॉल्स रखी हुई हैं.
I'll reshare the screen. Just a minute. Okay, we go here. Yeah.
यहाँ पर 2 स्टील की बॉल्स रखी हुई हैं. अगर इन दोनों को एक साथ छोड़ दिया जाए तो कौन सी बॉल रेस जीत जाएगी? आप बोलोगे ये भी कोई सवाल है, इतना आसान? ऑफ कोर्स वही वाली बॉल रेस जीतेगी जिसके सामने सीधी पट्टी है. अब ये वीडियो देखो. कुछ समझ आया? यही लाइफ में होता है. आप जितना तेजी से नीचे जाते हो उतना ही तेजी से ऊपर आते हो. अगर सीधे चलते रहे तो अपनी मंजिल तक पहुंचने में ज्यादा टाइम लगेगा.
Okay, yeah. So it's a self-explanatory video. So for example, we the video was in Hindi. Just I'll have some words in So if we drop two balls, one is going through a straight line and another one is going through a ups and downs. So the ball which is going through the up and downs, it actually goes faster. Like that, when market goes ups and downs, so our investments or our portfolio will grow better than traditional investments which are having fixed rate of return, maybe 5%, 6% or 7% fixed rate. People will feel that okay, safe. I'm not saying they should not invest that there also. They can invest certain amount in the fixed instruments. Okay. But the investments which are in the volatility, they will definitely grow faster. That's what the take away from this video. Okay. The same slide, like how the two balls, one is going straight and one is going ups and downs. For example, if you see the gray line, this is the fixed deposit investments. It was done from 2001 to 2020. Okay, so this is the straight. There's no negative, there's no ups and downs, there's no volatility. It's constantly the money has grown over the period of time. But there are two what I call as assets. One is equity and another one is in gold. The dark blue color is in the gold. Even it has also grown, gone through the negative phases at a certain time, because you've seen how gold is falling during a certain time. Gold is also fallen, but again it has bounced back. But equity will be more fluctuation than gold, because equity goes down and comes up, again it goes down, comes up, like that every down. If you see at the broader period from 2001 to 2021, it's a straight growth. If I draw a line from here to till here, it will be straight line. So this is the growth trajectory. Here, in this slide, what they're telling is the amount invested. Suppose somebody invested 1 lakh in 2001 in 3 assets: 1 lakh in FD, 1 lakh in gold, and 1 lakh in, let's say, equity. Okay. How after 20 years, that 1 lakh has become almost 4.25 lakhs in fixed deposits, which is actually negative growth if you compare with the inflation. The same thing, if I invested in gold, it has become 10 lakhs. So at least certain returns, inflation at par inflation rate, maybe 1 or 2% better than inflation return. But when I invest in equity, I'm getting 16 lakhs, which is 2 to 3% better than my inflation. So that's why equity investments are good for the long term, even though they goes downs and ups and downs, but over the period of time they grow. So this data I've taken from that value research website. Okay, this is a very interesting slide. Please pay attention to this slide. Okay, there is I showed you in the first slide, right? We are in the kangaroo market. The market goes down and again it comes back. What happened in August 2021? We are at 55, 56 levels. Okay, even though the numbers are slow, numbers are very small. Hope you are able to see that 55, 792, where I'm moving my cursor. Okay, if I see the same value in the month of December, it has come to the same point, 55, 822. What happened to the last 6 months? Like we had September, November, October. During that period, market went up and again it came down. Both are same level, right? But still, the market has given opportunity through in the form of systematic investment. So when we are continuing investing, even when market goes up and market goes down, so there's something called as absolute return between the same level. If I see the absolute return, it is, if you see, there's if you see the Sensex, obviously that 55 to 55 level, hardly there is any differentiation. But when we are investing the same money in the form of mutual funds, there is a certain growth, because of the expertise of the fund manager. They are generating some alpha even when the market levels are same. 55 to 55. Some funds have given 1%, some funds have given 1.5, 3.5. Some funds are also given 8% during the same period. This is how it will help. That's why the end point is, stay invested even during the fluctuating period. Okay, that's what the thing. So the next question many people are asking is when my portfolio will grow. So my question is, what's your stage? Whether you are a new investor or you are a seasoned investor or you are an old investor, depending on that, your portfolio will grow back again. For example, those who are started new, maybe 2 months back or 3 months back or just a month back, for them it's a right time. They don't see much excitement in the market. They don't see much growth in the market. They might see some 2%, 3% positive or 2%, 3% negative, and this will continue for maybe 6 months, 1 year, or maybe 1.5 years. But after that, it will start yielding you some 6%, 8%, or 10% growth over the period of that journey. But this is a good time to start. For somebody who has already started, like last 3 years back or 2 years back, or especially people who have started 1.5, 2 years back, they'll start seeing negative growth because they started at the peak. Now the market is going down. They started seeing -5%, -6%, or sometimes some people who are aggressive in equity, they might see -15% also. What they should do? They should stay invested because for them it's easy to come back, in a growth trajectory. And especially people who are seasoned investors, like if they're investing in last 5 years or 6 years or 8 years, for them hardly it may take 6 months or 8 months for them to get a positive return. So that's the time, depending on which stage. If you're a beginner, 3 to 5 years, it will take some beginners. It will take 3 to 5 years to see very good growth. For old investors, it might take 1 year or maximum 2 years to get positive return. This is when my portfolio will start growing. Okay. So before proceeding, before going to the live case studies, let me take a short poll here. I launch a poll, and people can answer this poll actually. Okay, hope you're all. Rekha, poll is visible, right?
Yes, it is visible. So I think Vasanta has raised her hands.
Yeah, we'll come back to her. After this poll, we'll.
Sure, sir.
So we'll take another 5 seconds, and I want everybody to answer this poll. What will I do during this time? The market is going down. What I'll do? It's your choice. What you're going to do. Oh, I can see good answers. Yeah. Few people are not participated. If they're using mobile, they have to go to the more option and they have to see the poll and answer that poll. If you are attending, especially from mobile, it's a extra option you have to check. Okay, let me stop the poll. Yeah. So I'll share the result here. Hope results are visible. Majority of them saying that during this time I'll increase my SIP values. For example, if they're doing 2,000, 5,000, or 10,000, they'll make it additional SIPs so that they'll use that opportunity. And some people are saying, along with my SIPs, I will add more funds. So good thing here is people are not redeeming the funds. That's very important, and they're not stopping their SIPs. That's also one of the important. So thank you so much for participating. Yes, Vasantaji, you can unmute if you have any questions or something. Then I'll go to the next this thing. I think by mistake she has raised her.
Yeah, please continue, Vikram. It was by mistake.
Yeah. So what I should do as an investor, what I should do, I should keep calm and do nothing. Do nothing in the sense, don't stopping or don't withdrawing the money itself is good. I should not withdraw the money, or I should not stop my SIPs. I should continue my SIPs because I know over the period of time it will grow, and I should stay with my investments. Second thing, as I told you, continuing your SIPs. irrespective of the market volatility, because many people, they because of fear of market downtrend, they stop their SIPs. I got few investors. They called me and they were trying to pause their SIPs. They are trying to stop their SIPs. When I called them and asked them why they're stopping or why they're pausing their SIPs, they said market is continuously going down, so I don't want to invest in a downtrend. But frankly speaking, only when investor is investing both during the bull run as well as during the bear run, then only they'll get that 12%, 10% exaggerated growth. Otherwise, if I keep investing only when the market is growing, I'll get normal growth, maybe 6% or 8% or maximum 9%. If I'm investing only in the market uptrend, I have to, as an investor, I should participate both in the uptrend as well as in the downtrend to make use of the entire market journey. Then only I'll see good growth in my portfolio. So continuing your SIPs. With SIPs, if you have certain extra funds, you can start investing some extra funds whenever there is a market down. Let's say tomorrow market is down by 1,500 or 2,000 points or whatever, and you have, let's say, along with your 10,000, 20,000 or 50,000 SIPs, you have another 10,000, 20,000 or 50,000. You can add those funds along with your SIPs. This is like, in a cricket match, we take singles on every ball, right? To maintain the run rate. The singles are like, SIPs. Every month, I'm keep on investing. Along with SIPs, whenever there's a loose ball or whenever the ball is on the, slot, I'll, take advantage and hit maximum, either 4 or 6. Similarly, whenever market goes down, it's in your slot, so that you can immediately log into your portal, or or you can add in the investments, additional investments for the same folio, for the same fund. You can add more funds to get good growth or add more units. More important, I'm very happy with the poll result. None of them have ticked I'll stop or I'll withdraw funds. So don't stop or withdraw from your equity funds. That is more. If you need money, there are some debt funds. There might be some gold funds or something where you wanted to urgently, if you need a fund, you can withdraw. But don't withdraw your money from your equity portfolio. Either it is equity, direct equity, or it is a equity mutual funds. This is very important. A lot of news in the market, because whenever there's a market correction, the headlines will come up. So this many investors have lost this many crores of money in the market. So this is there's a bloodbath in the market. All this news will come. All this, they'll start, popularizing. You see WhatsApp messages, or you see on social media and all those things. So don't focus on that. Focus on your goals. What's your end goal? What's your corpus you want to build? What is the amount you want to grow? That is where majority of the game is there. Okay. So we'll see a short video again, small video, and then we'll go to the question and answers. This video will summarize certain things as we discussed today. I'll reshare my video screen. Okay, yeah, let's go. Okay. In the video, there was a point when market fell by 700 or 800 points. They think that is a big fall. Okay. Today we are able to see 1,200 or 1,500 points going down. That itself is become big. So what I'm trying to say is during those years, 2009 and 2008 or 2010 period, even the 500,000 points fall is a big fall. But today, 1,000 or 500 or 1,200 points fall is a normal actually. Since it's a we are playing at a higher level, that's why it looks like a big fall. It's a normal correction actually. So during the bull run, from 2003 to almost like 2007, there is a bull run. Even in the bull run, 6 times market has fell. Maybe some 5%, 6% or 8% market has fell. We don't know. We might be in the journey from 50,000 to 75,000 levels of Sensex. So during that time, there might be some corrections. It might go to 52 or it might go to 48 or it might go to 55. Again, it will come back. All those things will happen. But ultimately, when you look at the larger period, it will go to the next level. That is what the whole idea is all about. Okay, we'll see some live cases. I'll show some live numbers. And in between, quickly we'll take 1 or 2 questions if we have any, or we'll take it at the end of the session. So anybody has any questions till now? If you want to ask some quick questions, we'll unmute and can ask.
Sir, Anil JG has raised his hand
Yes,
some
yes.
time back.
Yes, Anil sir. Okay, we'll come back. I'll share the
Sorry, I was unable to mute.
Okay.
Yeah,
Okay.
yeah. We can just small question. Like you said, there's an uncertainty in the market. So assume that if I wanted to book a profit of, say, assume I'm okay with a profit of say 20 or 30% or something in a long SIP run. Okay. So what you can suggest for such kind of investor where he can see, withdraw and rather than withdrawing the reinvestment kind of thing. So is it a good idea or see, because if I'll put up my own example, I mean currently in the age of 46. Okay.
Yeah.
So with the equity market, I won't be able to go. My vision will be around say 5 to another 5 years or maybe 7 years. Okay, not beyond that thing.
Yeah.
So if I wanted to book a profit and further reinvest and grow it, that will be a good option, or you suggest to retain it and keep on continuing, because SIP anyway we're not going to stop until unless we are earning in a our earnings are not got impacted or there will not be in a sudden kind of any kind of expense. So what is the suggestion?
So normally what we do for our investors portfolio, we move certain money from their debt portfolio to equity during this time. So we have been investing in some investments in debt and some investments in equity and some investments in hybrid. So whatever the debt we are seeing this opportunity, the debt portion will shift into the equity so that we'll participate in this journey. Anyway, your end goal is after 4 years or 5 years. Ultimately, we'll get a good growth. That time, we'll book a profit from equity to debt. For example, most of the investors who have participated for last 3 years or 4 years back, we have called them and booked a profit when market went above 55 levels. We have taken out some of their equity investments and moved to debt portion during that time. Okay, especially people who invested 4 years back or 3 years back, people invested. People who started just 1 year back, 2 years back, we have not made that option because they're not seen that huge growth. That's what the strategy.
Yeah, thanks, Vikram. Thank you.
Yes, welcome. Okay, we'll see that example as I showed you. This investor is started from 2015. Okay, let me share the screen. Okay, yeah, it's visible. Hope you're all able to see this Excel sheet, right?
Yes, sir, it's visible.
Yeah. So this particular investor, he started with 10,000 rupees monthly SIPs from 2015. So if it's a live portfolio actually. If you can see here, there's a date also actually. It's showing March 2015. This is the date, and this is the transaction date. December 2014, February, and March. So the 3 months SIPs. We had given him 5 SIPs. One in large cap. This is called large cap, and this is called mid cap, HDFC mid cap, and ICICI. It's a value theme. It's a value based fund, and there is a small cap which invest in majority of the small cap funds, small cap companies. And also we had one hybrid fund. Okay. So if you see the portfolio, it is like this. When it started, the portfolio was in 80% equity and 20% was in a hybrid. 80-20 ratio. We started aggressively because his goal was almost like 7 years or 8 years. How this portfolio has grown over the period of time. I have the data till May 2022, and like last Friday's data. I'll show you one by one how this portfolio has gone through ups and downs and how the investor has made a profit. First 1 year, we are having the same situation where we are in now. So there was not much growth. Especially people who started in 2020 August or September, they'll also see negative growth now. Minus 5,000 or minus 7% or minus 6%. So total investments in 1 year, he made almost 1,30,000 investment, but his portfolio has given 1,26,000, which is 5,000 negative, okay, which is at a minus 7.46. So these are the same funds which I told you, like one large cap, mid cap, value, and small cap, and hybrid fund. And the portfolio remains almost same, 80-20 ratio, 19% hybrid, and you're able to see the picture, right? Equity 80%, hybrid 19.69, almost same ratio, like 80-20 ratio. Okay. 80% in equity. Hybrid is a mix of both equity and debt. Okay. Now, in 2017, what happened? Same investor, he has invested almost 5,18,000. Along with his SIPs, he added one lump sum amount that is called as hybrid fund. It is in the 2 lakhs investment he has invested. So his total investment has become 5,18,000, and there is some growth actually. If you see for 5 lakh or 5,72,000, it was like for 54 or 55,000 rupees of profit at 11%. It's a nominal growth, and the portfolio now it will show because we added, since he added lump sum amount, it is showing 50-50%, 15 hybrid and 15 equity. So we are not invested that big amount during this time in the equity market. We invested into hybrid. June 2018, what happened? Market went through the boom phase. As I told you, there's a cycle, market uptrend. The market went through an uptrend. So total investment became, that SIP has also is increased from 10,000 to 20,000 during that period, and the total investment became almost 10 lakhs, 9,85,000, and with the returns of almost 2.86 lakhs. The total value is 12.72 with the interest rate of almost CAGR 23%. So this is when actually after 4 years, 2015 he started, 15, 16, 17. After 3 years, 4th year he started started seeing good growth. That's why normally any investor who's starting now or who started starting investments, we say minimum they should spend at least 4 to 5 years period. That's when they see good growth. That is a normal period to get a good growth in the market. And this time we added some portion into commodity, that is gold, and some into hybrid. Hybrid anyway it was there. Hybrid was 30%, gold was 10%, and majority was in equity, 60%. So what I'm going to say is equity has reduced over the period of time. When the market went through the uptrend, we have cut down equity from 80 to 70%, and we'll still continue with SIPs. This is the very tough period. This is the period where market was in sideways during 2019. The market was neither going up nor going back. The same thing. FIS, they're withdrawing the money and they're reinvesting, and there's no much participation from DIS also. the market was in sideways. That time his total investment has become 15 lakhs and total value has become 16 lakh 25,000. So with a 1.25 lakh, is actually his profit reduced because his interest is also reduced. But he has added more money and he continued his SIP. So as a normal investor, when my portfolio, in 2018, it was showing 2.86 lakh, and now if it shows half of that amount, I will tend to feel fearful and scary, and I'll withdraw the money, right? But since that investor has seen both the phases, he continued his journey without much worrying about the market. He continued his journey. And the portfolio, I show you the portfolio, same thing. Is equity SIP is continued, 60% equity, 30% debt, and 35% in hybrid, and some 7% in the gold to hedge his portfolio. That is what the strategy. 2020, and when the same phase continued, and especially in 2020, market fell. Okay, his portfolio also went into negative again. But in 2020 Jan, if I take the data, it is total 19.29 lakh of investment. His SIP is almost 40,000 rupees every month. So he started from 10,000. After 2 years, he's increased it to 20. Now after again another 2 years, he made it 40. This is how he's started increasing his SIPs. And returns are very good return, 15%. I say it's a really good return. Even during 2020 when markets were in a sideways, it is not giving you very high return. And portfolio efficient, he needed that gold fund. He wanted to buy something. He withdrawn the gold fund, but his SIPs. If you see here, we started increasing his equity because the market was in sideways. We started increasing his equity portion from 50 levels to we made it 65 and 35 in a hybrid. We continued this. So this is when actually he started giving seeing good growth. Total investments in 2021, January 2021, his total investment has become 43 lakhs and the value has become 51. So the loss from 2018 to 2019 and 20 has actually recovered in the 2021 by almost 8.4 lakhs. Even though the interest rate CAGR return is less than 2018, but still the value of that investment has grown very well. So this is the beauty of staying invested during the tough period. Like 18 and 19 was a tough period. He stayed invested and he made his good amount of growth. So even in 2020 when market went down, he had certain funds. He added some lump sum money also. So the growth is also good. Now what we did, we reduced his equity exposure. See, 65 levels was an equity, right? We reduced his equity portion because of 2 reasons. What are the 2 reasons? Because in 2022 end, December end, he's going to accomplish his goals. I mean, he's very close, going close to his goals. We don't want to put his money in equity and take a risk. That's where we added that money. We moved to debt funds. So 15 hybrid is there. You're able to see the 50%, right? 49.72, which is almost 50% in hybrid, 30% in equity, 32%, and remaining 20% or 17% is in the debt portion. So debt will not fall when market goes down. Correct? What is the in 2022? So 2022, its total investment has become 68.67 lakhs, and his SIP went up almost doubled. From 40, is almost increased to 1 lakh every month SIP. At that time, the CAGR return, we have seen 20% growth with 87.5 lakhs of a portfolio value. Okay, with almost 18.83 lakhs of returns. Now what happened? We were maintaining at this in January. We were maintaining this portfolio. How much in equity? Equity only 25%, because some money we added into gold also. Debt was there, 8% debt, and another 12 to 13% in hybrid, gold, and remaining 50% hybrid we kept it, so that you should not miss out if there's any rally. He'll be participating it through that 53 plus 25% of equity. Certain portion will be in equity in hybrid also. So that's how he is participating in the market and is able to give a good growth. At the same time, when market goes down, is corrections will be less in his portfolio. That's what I want to convey that point. Now, since markets are volatile from January, especially February, March, war started and market went down, right? What will be the current value? Current value is total investment has become 72.67 lakhs, and total value has become 85 lakhs, and total CAGR return, it has reduced from 20 to 10% because of the market volatility, and total growth 18 lakhs was the total net profit. Now it has become 12.4 lakhs, and we started increasing his equity portion slowly, not because his goal is very nearby, so we don't want to take risk on his portfolio. So the portfolio is now still today also it is at 26 levels. 26% is in the equity, remaining is in debt, commodity means gold only, and 50% still is in the hybrid. So hybrid, anyway, it will, the fund manager will play in such a way that he will manage the funds, okay, irrespective of the market conditions. So this is the journey. The point here, I just wanted to convey you is that every investor goes through some rough patches. He will see a lot of ups and downs, but at the end of the day, just staying invested and managing the asset allocation. Certain portion in equity, certain portion in gold, and certain portion in debt, and certain portion in hybrid. That's managing the portfolio is very, very crucial to get a good growth in the market. Hope there's a lot of clarity with this example. So with this, we'll I mean, this is the point, last point which I just wanted to convey, and let's open it for any other questions. Which if I missed any other questions, can ask those questions, clarify those questions. Thank you all for staying with us and throughout the session and participating in the session. We'll take some questions. You can raise your hand, or you can unmute, or you can put it in the chat box, wherever you feel comfortable.